recently talked a little bit about this announcement that Ripple made. It's basically a part of their new ad as well. And essentially what it confirms is that institutional payments are here, secure asset custody, regulated, stable coins, everything on chain. This is the start of everything. We are witnessing it happen in real time. The convergence of crypto and TradFi is now here. We don't have to speculate about it. We don't have to say, oh, I think that this is going to happen. No, it's actually happening in front of us right now, currently. But most people are just oblivious to it, and I get it right. We're mainly focused on price action. However, the biggest thing that I want you all to realize here is that yes, price action in this market does suck, but you got to remember that it's not tied back to the actual value of these networks. If that was the case, we wouldn't see everything following Bitcoin when Bitcoin sells off. We are still tied back heavily to Bitcoin. Until we start to break that cycle and decouple completely, and we start to see utility be the driver, we're not going to see the real value of these underlying assets. But this statement is very true from Ripple, and we did hear from Jack McDonald from Ripple at Ripple Swell, which we'll play a clip from him in a second here. But I want you guys to understand that the key to institutional payments and everything moving on chain is a liquid, stable asset. We look at stable coins being those regulated products that are stable in value and are the key driver of this, because we need extreme amounts of liquidity in order to, really cover the extreme amounts of demand that's coming from these institutional players. Now let's go over here to Jack McDonald, because we do have here, he's explaining what's driving stablecoin growth. We have some regulatory tailwinds specific to stablecoins around the Genius Act, giving institutions the clear signal to enter the market. Check it out. Crypto is having a moment, and stablecoins are having a moment in the moment, if you will. And I think what's driving the growth of stablecoins is a couple of things. We have some regulatory tailwinds specific to stablecoins around the Genius Act, which has really given a signal to institutions that you can come into this market and use these assets in all sorts of different ways. Crypto's having a moment and stuff. And yeah, listen, when we think about what's happening here for crypto, obviously regulations are becoming a reality. Regulations are starting to move extremely fast. The Clarity Act is upon us. We've been hearing about how it's 90% of the way there. That's definitely a big thing that I have been focused on, because the Clarity Act is like the last major obstacle for crypto. And that's going to give the institutions the true clear signal to jump into this market, which is why these major advancements around legislation are so important to really, have focus on, and also really kind of follow them as well as they do get closer to getting past. The Genius Act was definitely a big one. Now on top of this, we did see from Jack McDonald, and this goes back to November 6th, he did announce closed out day 2 of Swell 2025 with more roasty news and a panel discussing the promise of stablecoins alongside OKX, Securitize and B2C2 Group. We're collaborating with MasterCard, WebBank, and Gemini to introduce RSD settlement on XRP for fiat credit card payments. Extending our partnership with Securitize, private credit is now connected to tokenized treasuries. Hamilton Lane HL, Scope has RSD liquidity through integration with Vanix USV bill. Over the weekend, we crossed $1 billion in market cap in less than a year since our launch in 2024 as well. And yeah, just looking at RSD here as well in terms of the stablecoin market cap view on RSD.xyz. We do have RSD here at about roughly $1.1 billion, up 27+% in the last 30 days. It's looking as though it's about to flip USDTB. And I mean, at this point, we're about to scratch into the top 10 for RSD in terms of stable coins. And we have over here from RSD as well. This is the $1.1 billion, 27% up in the last 30 days. Monthly transfer volume is down slightly here. Holders are up. Monthly active addresses are also up. And we could see that a lot of this value on the XRP ledger is starting to shift here. We're almost at over $203 million. Exact up 119%. So very, very good insight here for the stablecoin market side of the XRP ledger. And of course, looking at this view here, we do see that the stablecoin market cap is up 46+% in the last 30 days. And most of that growth is coming from RSD along with a few other stable coins as well. Now looking at what Reese Merrick, also an employee at Ripple, recently put out on X. This goes back to the 18th. We do have 40 years. Fintechs have been racing to build a global rails to avoid the correspondent banking network. The result, hundreds of banking partners, thousands of Nasra Vasco accounts, which by the way, we've always talked about Nasra Vasco accounts being $27 trillion. If you guys go all the way back to 2021, we were talking about it as well. And billions of dollars of trapped capital sitting idle just to pre-fund settlements. Every new corridor means another account to fund. Every new currency means more liquidity locked up for days. This isn't scalability. It's expensive plumbing disguised as progress. Stablecoins change the game. One global liquidity pool, instant settlement, minimal fees, capital efficiency that actually scales with volume. At Ripple, we've been saying this for years. The future of cross-word repayments isn't more bank accounts. It's utilizing digital assets that move like the internet does. RUSD, XRP, and the XRPL. And yes, this is the internet of value. This is where we do see those Nazar Vassar accounts completely unlocked. This is where we start to see the entire landscape around payments completely shift. Stablecoins are a big driver of this. Now recently we just got a big update from regulators. Number one from the SEC, we have here from Coinburo breaking the SEC just dropped crypto from its 2026 priorities. The new exam plan doesn't mention crypto at all, suggesting it's no longer treated as a special risk area. This is very good to see. We are starting to see crypto no longer be that risky asset class for regulators. Regulators no longer want to focus on crypto in that way. In fact, they want positive progress. They want to make sure that crypto thrives. They want to make sure that crypto becomes, that extremely efficient asset class that it's meant to be. And they also want to make sure that crypto gets integrated into the system. So this is very bullish from the SEC. But it wasn't just the SEC. Justin, this is from Crypto's RU. Justin, the OCC says banks may hold crypto to enable payment of blockchain network fees per Bloomberg. This might sound minor, but it's huge. Regulators are basically recognizing public blockchains as official financial plumbing and gas fees as a normal operating expense for banks. It's a quiet but clear signal that US banks are now expected to use crypto rails, not just watch from the sidelines. And of course we do have here from the OCC. This is from November 18th. The OCC confirmed permissible bank activities related to paying crypto asset network fees, sometimes referred to as gas fees. This is the breakdown of it. So again, we love to see this. And you know what's crazy about this? This gets announced 4 days, because it's on the 18th, 4 days prior to ISO 2002 going live. ISO 2002, the cutoff date, November 22nd. We now have the OCC confirming that banks may hold crypto to enable payment of blockchain network fees. This is very interesting. I don't believe in coincidences. We already know that SWIFT and a lot of these big players have already been talking about integrating crypto and stablecoin initiatives into their plans. I do not believe in coincidences here at all. This is, in my opinion, coagulated with ISO 22 launching in 4 days. Now we also heard from the American Bankers Association. Well, technically just American banker, right? But this is like a big player in the banking industry, if you will. This is from Uphold. Banks are waking up to the greatest wealth transfer in history. $80 trillion is shifting to digital native generations who expect money to move instantly. Uphold CEO sat with American banker on what comes next. Check this video clip out, and then we'll continue from this point. What banks are waking up to is over the next 15 years, there's going to be the largest wealth transfer in history. It's already started. It's already started. From baby boomers and Gen X to Gen Z and Gen Alpha, $80 trillion of wealth is going to be transferred to digital native generations. These are people who are going to expect money and investments to be as instantly movable as a text or a video file. Blockchain really is best seen as a recognition that most money and financial assets are just digital information But in the legacy world, there are lots of different ledgers that don't talk to each other. And so you end up with unnecessary friction and cost and intermediaries. Whereas this new coming generation is going to expect instant movement of money globally.